and that you guys may have. Okay, today we'll be covering a few updates on the 100% fix and flip program. Got a couple of new loan products as well, and just want to go over how the files move through the system. A lot of people had questions on that, so we definitely want to cover that to kind of get into the how things operate behind the scenes. And after that, have a Q&A session, question and answer session to address any concerns or any questions you guys may have. This is 100% fix and flip funding. As you guys have had training on this before, as you know, the benefits of this program: lower down payments to keep more money in your pocket. There are no monthly mortgage payments. The points and lender fees are rolled into the loan. The new feature that's going on, at least for the past month or so, has been now the broker points are rolled in as well. So it used to be that there was 1 point financed by this company. Now it's 2 points. So basically, the borrower will be able to finance the lender points, the lender fees, and also the broker points as well. So that's all rolled into the loan. The only thing they have to come out of pocket would be transactional costs, taxes, recordation, and maybe anything that's missing from the loan. If it doesn't get to 100% fully, sometimes I've seen it get to 98%, 96%. But bottom line is the fees and the points are rolled into the loan as well. As we know in the past, I think we talked about this, how to qualify. You have to have 4 more projects in the past 5 years. Licensed contractors, they get credit for 2 projects. You have to have a 680 or higher credit score. Now, one of the updates that has come across has been the profit margin, because in the past, we weren't calculating that. We were just telling people 4 more projects and 680 higher credit score, and you've got a good deal. You qualify for 100%. As we've gone through some of these deals and some of these files, we've come to find out that the profit margin has to be between 12 to 15%. And we'll get into that a little bit later. But that's pretty much these are the 3 thresholds you have to meet to basically qualify for that 100% financing. And also no heavy rehab. That's another thing that came to light. We had a lot of applications that came through, again, thinking that they would qualify because people had the 680 credit score, they had the 4+ projects, but the project itself, when it came down to it, didn't qualify because it required heavy rehab. So now we know that if you have something that's down to the studs or something that really needs a lot of work, then this wouldn't qualify for the 100% program. The profit margin calculation, what we've, between us talking to the lender and figuring out the deals that we've done in the past with this lender, the net profit has to be around 12 to 15, like I mentioned before. I'm not sure, some of you may or may not know how to calculate profit margin. It's pretty simple. The net profit divided by sales price equals your profit margin. As an example, if you made 26K, let's say you sold your property, at the end of the day, you came out with $26,000 in your pocket, and you sold that property for 180. That was a sales price, 180. Your profit margin was 14%. Now, the way they calculate, this lender calculates it, is they do it a little differently than I normally would. When I calculate net profit, I look at more things than what they're looking at. I look at like carrying costs, utilities, insurance, some other things. But for the purposes of this model here, if you guys are trying to calculate at 12 to 15%, it would be the sales price, what you're going to sell the property for, minus 4 things: the purchase price, 12 months of interest, points and fees, and realtor commission. So that's how they come to that number. I've created a spreadsheet. So if any of you want the spreadsheet that helps you calculate this when you're running through numbers with your clients, definitely let me know. I'll be able to forward that over to you. But the bottom line is we're able to figure out what they're looking at from an underwriting perspective is going to help us qualify more people for that 100% financing. What they do is they call it a full stack. The difference between what they were doing before and what they're doing now is this loan is accomplished by 100% is accomplished by 2 loans: the first trust and the second trust. They're all within the same company, so it's not different companies, but they're doing a first trust loan and a second trust loan. Whereas before it was all 1 loan, now they're dividing it into 2. The first trust is typically around 80 to 85% of the purchase price, and the second trust covers about 15%, 20%. The benefits, of course, 100% funding. no monthly payments. We did come to find out that there are two separate HUDs created by these things. So you've got higher closing costs, somewhat, not necessarily end of the world. You're getting 100% financing, but you still are talking about two sets of docs, two sets of HUDs, basically recordation for another note, taxes for the note. So it does raise the closing costs a little bit, but that's how they're accomplishing this. As of today, as I mentioned, as of July 24th, what I've been seeing is the first trust is typically in that 10.5 to 11.5 interest rate. And the second, which is the balance for that difference, which is typically around at 20% of the purchase price or 15% is going to be at the 18%. So that's kind of how they're doing it. They're combining two loans to come up with that 100% full stack. And this is how they break it down. So again, these are things that we found out just dealing with the company over the past 3 or 4 months and doing a few deals with them, coming to understand how they calculate and how they look at things and what they process. A couple more updates with this lender. They've gone from 750K to 1 million now. So that's gone up. And they're now also offering DSCR loans and bridge loans. So it's good because if you have a client who wants to just convert into a 30-year loan, they don't have to go too far. They could just stick with the same company and be able to qualify. That lender already has their credit, lender has their background, everything else. So they'll be able to take off into a 30-year loan as opposed to before where they had to just go ahead and go to somebody else. Wanted to introduce a couple of new products that we have going on now. There's been a lot of demand for rural properties. We get a lot of applications, and as they come in, we have to turn down a lot of business because they're in areas that are not urban, and so we have now a source for rural loans, rural properties, and it's both rehab and new construction as well. There is a cap. $1 million is the cap. It's $1 million cap on this. However, again, if you have clients that have properties in areas that are underserved or rural, then of course we can definitely get them funded. They're also for properties sit on 5 or more acres. That's another problem we've been encountering as the deals come in. If they're on 10 acres, 20 acres, it doesn't qualify for a lot of these lenders. It's a flat out no for many of them, actually most of them. So we do have a place to put these. If you have something that sits in, again, more than 5 acres, we can certainly get that done. Modular homes, same thing. We get a lot of requests and it's been tough to place them, but we have a place that could actually accept them and they could actually underwrite and get this done for you. And lastly, small loans. These are micro loans basically against real estate. Um, what's been happening in the past, we get loans that come under the 75K threshold. A lot of lenders set 75K, some set 50K as their minimum loan, and that would rule out a lot of people that have a property free and clear and need to pull some money out quickly. Unfortunately, they just don't meet that threshold. If it's a lot of them they want a small loan. They don't need 75. They don't need 100. They don't need a 150. This lender actually allows them to go down to 20K. So if they want to pull some money out, it's hard money, so it's not a big process to qualify for. It's expensive, as you know. Hard money, private money is going to be more than just the banks, but it's a way to get it done if they want something quick and small and they don't qualify for some of the stuff like the unsecured lines of credit. Their credit isn't that great. They could actually use their property, pull some cash out short term. It's not long term. It's 12 months, but again, it solves their immediate cash problem if they have something they need to do. Wanted to cover, we get a lot of questions about how files move to the Sequoia system. And so that's something I wanted to cover briefly as well. A lot of new people ask me these questions, so I just want to kind of go over that process. As you know, the website is designed to capture everything that we need. So initially, someone will go onto the site, fill out the form, and the form comes to us. We are able to review it. We match it to the best funding source in our network. So we make sure that we're not wasting too much time or energy. We want to make sure that these applications that come in, they're viable, that they can get done. And if they can, we'll go ahead and send them to the right person or right company that can actually get them funded. We actually create a specific list of required documents. So each lender is going to be different. And what we do is when we find out who the lender is going to be, we go ahead and create a list of things we need and send it to that borrower. So that borrower is able to actually see on paper, hey, I need XYZ, whatever that list is, whether it's 5 things, 10 things, 15 things, whatever it is, they'll see it and they'll be able to provide it to keep that file moving. And upon receipt of all these documents as they come in, we get to work as on processing these files. We contact third-party companies, appraisers, title companies, whoever we need to talk to basically get it done. So again, just wanted to kind of quickly capture how these files move as they come in, because when they do come in, a lot of these things are not seen. A lot of agents prefer to be off. They don't want to be involved in the process. They want hands off, and so we are able to do all of these things here mentioned here. Again, filter out the application, filter out the borrower, make sure it goes to the right place, collect the documentation, and make sure again we're talking to the right parties involved. Once we get the once we get the file, of course, we monitor it closely to make sure that the files don't stall. That happens a lot, and it happens for a number of reasons. But we try to unclog wherever we see a situation that's basically taking time or energy, or sometimes it's the lender, sometimes it's the borrower, sometimes it could be us. But again, we try to identify where the problem is to make sure that the file keeps moving. And again, just a quick thing about what happens behind the scenes. It's a quick synopsis of what we do. We collect and organize documents, review the information. In certain cases, we're the ones pulling credit or background. We request missing information or documents. We try to present the file because we know these lenders, and so we know how they like things and what they like to see. So we present the file in a manner that's going to basically give it the best shot possible to get approved and to get ready for the underwriter. A lot of times when we talk about file fatigue, where you get tired of seeing the same file over and over. It's just like every day you wake up and the file isn't going anywhere. That creates a level of fatigue. That also happens on the lender side too. When they see something there that the file isn't moving, it's going in circles, they tend to put that file to the bottom of the pile. So we want to make sure we keep that in front of them in a good way, where we're giving them information that they need, that they're asking for, and that everything moves according to plan. Hello?
Vincent, who? Huh? Who was Vincent? Vincent, what's the last name?
Bruce Pinson. Bruce Pinson.
I'm hearing somebody else. So can you hear me?
We got you. That was Benny. Keep going. We got you.
Hello?
Yeah, go ahead, George. Keep going.
Okay, gotcha. Okay, cool. Yeah, so bottom line is we do what we can to get the file of settlement. We contact who we got to contact. Again, this is all behind the scenes. People don't necessarily see this. They see the application come in, they see the closing, but a lot of times they don't see what value goes in behind this process. So again, we just want to be that the liaison between underwriters and borrowers. We contact everybody we got to contact, and we do that. I mean, we get on the phone, we email, we text a bunch of companies, whether it's agents, whether it's sellers or buyers, insurance companies, title companies, whatever it is. And bottom line, we do whatever it takes to get the settlement. So that's really what we pride ourselves on. Hey, really jump in and do what we got to do to make sure that file closes. And that is basically it. I know this is shorter than our typical training, but I just want to kind of close out with a question and answer session. If you guys have any questions, not just on this, anything at all, as far as the process, any loan products or any deals that you guys may have going on.
Hi, George, this is Dave.
Hey, Dave, how you doing?
Good, guy. Hey,
Good.
I was in a phone conversation a few minutes ago with a prospective customer, and he has experience of like 2 fix and flips. His girlfriend is a licensed realtor, and by the way, he's a licensed contractor as well. His girlfriend is a licensed real estate agent, and she has done fix and flips as well. How do they combine their experience to qualify for, say, like the 100% program? Is that possible, or does it have to be based on each individual experience?
No, it's very possible. So if they've both got, so from what I understand, one is a licensed contractor.
Yes.
Okay, and the other, how much does he or she have? The other partner?
I don't know. I know that she's done flips before, but I don't know the exact number. I know they individually didn't meet the criteria, but I was trying to find a way for them to combine their experience.
Well, that's fine. And that's a good point. You can do that. So in this case here, because there's a licensed contractor in play, that qualifies for two projects off the bat. So that's two right there. And if the partner could prove, or if that is the same individual, because just because you're a GC doesn't mean you're capped at two. So for example, if that person is a GC but has completed two other projects, that license gives them two, and they've done two others, that's four right there. Or if they've done no other projects, but they just done work for other people, that license entitles them two projects under their belt, and then that other person can bring the two as well. And they go back 5 years. And I said this before, you know, a lot of lenders go back 36 months. This lender actually goes back 5 years. So there's a lot of look back periods. So they can actually look, they can get two projects within the past 5 years, along with a partner that has two, or in some cases where you have three partners and they all come together. That as long as they're on the LLC and they're willing to sign the note, which means they're going to be guarantors of the loan, then that's fine. And the same goes for credit too. So you can combine experience and credit as well. You might have one partner in the 500s, another in the 800s, and so the 800 partner credit, they'll look at that. A lot of lenders tend to look at the bottom score, or the investor or the borrower has the lowest score. In this case, it's the opposite. They'll look at the highest to use that person as the experienced partner, and then the other person could bring in their list of projects as the I'm sorry, they look at the credit partner and the experienced partner. So the credit partner, of course, is an 800 plus credit score. The experienced partner will come in with the 4+ projects.
Okay. All right, man. Thanks, man. I appreciate you. If they actually submit their
Absolutely.
scenario, I'll bring it to your attention.
Absolutely, yeah, definitely, please do, please
Thanks, George.
do.
Hey, George.
Yes.
Okay, is that it?
Yeah, that's it. If anyone other questions out there, definitely we could call it a night. I don't know if anyone has any other questions. I'm going once, going twice.
No, George, this is Andre. We appreciate you. Thank you, sir.
Hey, man.
No problem, Andre. Thank you.
I appreciate you too, George.
I appreciate it. Thank you guys.
Okay, all right, so let's make sure that on this week, on Friday, on this Thursday, we've got sales training at 8 p.m. Eastern Standard Time for everyone. You guys can see the post inside the Sequoia group. And then also on Friday, we also have sales training. We're going to be speaking on how to obtain big lines of credit, 100, 200,000, 300, $400,000 lines of credit, how to get approved. And we're bringing on our guest speaker, MQ, who's going to be hosting that. So just a reminder, everything is on the Sequoia page and on the G2 Global Network page as well. Okay, so. All right, George, good training, man.
Well, thank you guys. Appreciate it.
Thank you very
We'll
much,
do it again
George.
next week, Wednesday. Thanks for participating. Definitely appreciate you guys.
Okay, all right, thank you.
Thank you.